If your depreciation hits the P&L, but your balance sheet doesn't move, you didn't record a journal entry for depreciation correctly. Let's fix it fast. I'm a CPA and I review these entries every month in cleanups and closes. What you'll learn: the standard entry, debit, credit edit, 2 quick real examples, where it shows up on the financials, what reviewers check. Step by step, calculate periodic depreciation from your schedule. Post the entry: debit depreciation expense, credit accumulated depreciation, contra asset. Do it monthly for clean reporting. Example 1, laptop equipment, $1,200, 3 years, $0 salvage, $33.33 MO. Entry: debit dep expense, 33.33, credit accum dep equipment, 33.33. Example 2, truck, $30,000, salvage $5,000, 5 years, $25,060, $416.67 MO. Same entry. Reviewer notes, red flags: booking to the asset account, random round numbers, posting once a year in March. Reviewer insight: accum dep should never exceed cost. Expense should trend with the schedule, no spikes. Proper account mapping by asset class. Period cutoff, month matches usage. Tie out, schedule equal to GL. Supporting docs, depreciation schedule plus fixed asset list plus prior month roll forward. Quick checklist recap: dep schedule updated, useful life plus salvage documented. Debit depreciation expense, credit accumulated depreciation. By asset class. Tie schedule to GL. Check accum dep cost. Review flux versus last month. Save support in close file. If this sounds like your close process, you're not alone. Drop a comment with your biggest depreciation headache. Like plus subscribe for more month-end entries.